Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We're seeing the dollar bounce back today. The dollar index is looking fairly strong, coming off that 97.5 on the December contract. That's what the floor was, similar to the September contract that expired at 98. Looking at it, it is Fed week, and you're starting to see some of the odds that the Fed won't cut rates this week become priced in. It's about almost a 1/3 probability that they don't cut rates now. This is the highest in months. So as Wednesday approaches, we're seeing the dollar firm up. We're seeing weakness in the euro. And as we've been noting here for weeks now, that at minimum, we don't think the Fed's going to come off as dovish as the markets have priced in. And now they're starting to price in the fact that they won't be. So where's the value? You know, the dollar index, it's holding ground extremely well. It's building that nice technical floor, and it really paves a path of least resistance in the dollar index to that 101 trend line we've talked about going back 20 years. Now, again, you have to see what the Fed does. Tomorrow, we do get some data, industrial production. Today, New York Empire State Manufacturing came in just slightly below expectations. So it's going to be a busy week. Keep an eye on things as they develop. Obviously, the news last night with Saudi Arabia, or the news over the weekend with Saudi Arabia on the drone attacks, it encouraged some of the safe haven buying. You saw the yen accelerate higher for a bit. It did come back in on the day. A lot of the safe havens ultimately held ground, but didn't advance as one could have imagined. 93 in the yen is a big level that's going to that trend line that we talked about for the September contract at 92.5. Overall, though, it's going to be an interesting week for the safe havens. What does the equity market do? And on two sides of the coin, if they don't cut rates, we could see equities sell off. The dollar rallies, but are the safe havens going to become demanded given uncertainty now, a heightened uncertainty because the deteriorating growth conditions, maybe not here in the U.S., but abroad? And then look at the euro. Going back to the euro, resistance in the December contract, 111.80. That we've come off of that pretty sharply over the past 24 hours. That's where that trend line is, and it's a very, very steep trend line. So to the upside, if we get out above that ECB high in the euro, we could start to run. That's going to be your ceiling, and the trend line now comes in below there. So keep an eye on that. But to the downside, if the dollar index moves up to 101, you're looking at the euro working its way down to 107 to 108 area, and that's where the French election spike came in, and then really the rally thereafter that continued for over a year. So see that in the euro as a big crucial area if the market starts to break down. And then look at the commodity currencies. The Aussie dollar, it's held up. This is recovery. This is a dead cat bounce ultimately. The Chinese data last night was poor. Industrial production, the worst since March 2002, and their fixed asset investment, it's been at all-time lows. So the Aussie dollar, this is a really dead cat bounce. There's some resistance here at a halfway retracement, 68.80, 68.90. Then you also have the 50-day moving average, but the Aussie dollar just really can't close out above there to extend gains. So it's starting to build a little bit of a ceiling. If the US dollar advances, it's going to pressure the Aussie. The copper had a poor session today. Obviously, the crude oil had a strong session, but you're not seeing those commodity currencies really advance. The China data poured cold water over it. The rally of the Canadian dollar was more subdued than we would hope. We are bullish the Canadian dollar. The floor at 75 gives it the opportunity to advance. On top of that, if crude oil is rallying, it's going to support the Canadian dollar. If there's longer-term production outage out of Saudi Arabia, could some of that come from Canada? Very likely. It's very favorable for the Canadian dollar, but the overall broader conditions globally are not. And then China data, again, poured some cold water over a potential rally. But remember, the Bank of Canada is diverging in policy here, and if that continues to stay course, we do like the prospects of the Canadian dollar over the next 30 to 60 days. But give us a call. It's going to be a busy week. We're here to help. 312-278-0500. You can email us at info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial or research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.